Last week, I have mentioned that any bullish retrace is an opportunity to go bearish and not bullish. And this was very much clear through the weekly chart because there was a very heavy bearish condition. And because of that condition, I mentioned that the next weekly candle will be a red candle. Thursday morning, when there came a very heavy gap up open in the S&P 500 and in the Nasdaq, whereas Dow Jones was struggling. And this was primarily because of Nvidia and the other prime stocks. However, what we knew is that irrespective of any open or anything, the bullish side will be limited to the 676x/7x maximum. And in my pre-market analysis and also in the first update and subsequent updates, I've repeatedly mentioned that maximum to 676x/7x zone. That's it. And then we have seen an intraday 3% fall in the S&P 500 from top to bottom on Thursday. Though this fall was more than expected, but this fall has confirmed that the market is in the bearish cycle. However, we did not have to wait until Thursday to look into the condition that it is going bearish, because on Tuesday on 18th of November, S&P 500 has given a perfect crossover in the moving averages and came down, entered into the 6,500 range and confirmed that now the market has entered into the bearish cycle. On that day, it was clear that the maximum, it will be 664x6x, and the minimum it will try to hold around 658x. And all of this started to happen from Monday itself when the MACD gave a bearish crossover on the weekly chart. Again, I've repeated in this, the midweek update video, that any bullish retrace is an opportunity to go bearish, not bullish. And on Wednesday onwards, the 664x6x started to act as the strong resistance. And after Wednesday, we have seen this, the heavy fall. So now when I say the bearish cycle, then this means that it is indicating 6,200 range in the near term. And now just one last thing is pending to trigger this heavy fall, that is a closing below the Ichimoku cloud. That's it. But at the same time, as long as the moving averages are trading bearish, any bullish retrace will be seen as an opportunity to go bearish and not bullish. But the good thing is that the S&P 500 moved between the levels and the zones. Now, how exactly the S&P 500 is going to follow this path? All of these conditions, the levels, the numbers, the movement in the bullish and the bearish side, all of that I'm going to discuss in detail in this S&P 500 weekly technical analysis, which is for the week of November 24th. Means from November 24th, which is Monday, to November 28th, that will be Friday. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, let me tell you that I have divided this S&P 500 weekly technical analysis in two parts. First is the technical part, where I will discuss the weekly and the daily chart, and I will show you the further that if there is any room for the bullish retrace or not, or if the fall will continue as is. Second part is the probable movement. In the probable movement section, I will tell you how the S&P 500 is expected to move, whether it will first move up and then come down, or it will first come down and then to move up, what kind of movement will be expected. So now I am going to start with the first part, that is the technical part. So guys, this is the weekly chart. First I will discuss the weekly chart and then I will discuss the daily chart. Okay. So in this manner, we will cover the technicals, the technical indicators, the candles and everything. Okay, and the picture will be very much clear, because last time these were the technicals and the candle patterns that have triggered this heavy fall. Okay, so this is the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Okay, so let's first discuss this, the last weekly candle of the S&P 500. Well, it's a good or heavy bearish candle. And also this candle closed below the moving average, and also the closing of the candle is below the low of the last 4 weekly candles, means last 1 month, whatever the movement was there. This indicates a gap down open on Monday, or irrespective of any open and initial or intraday bearish movement on Monday. Okay, so a gap down, or if not, then an initial or intraday bearish movement, means a bearish movement on Monday. Okay, this candle is indicating that kind of movement. Now let's analyze the last weekly candle of the Dow Jones. Okay, Dow Jones is just for the confirmation. Okay, because most of the times we see the traps in the S&P 500 and the Nasdaq. That is why I always analyze the Dow Jones, okay, just to confirm whether there is a trap or not. Okay, Dow Jones, the last weekly candle, okay, heavy bearish candle, closed below the moving average, closed below the low of the 1, 2, 3, 4, last four weekly candles, the same thing. Okay, so a gap down open on Monday, or irrespective of any open and initial or intraday bearish movement on Monday. Okay, furthermore, it's not just restricted to Monday. Okay, it also indicates the continuation of the fall. Why? Because the closing was below the moving average. Exactly the same you can see here in the S&P 500. The closing was below the moving average. In these cases, what happens is that the market try to move towards the next moving average. Okay, next moving average is in the 6,400 range. Okay, this means that as of now, from here to the 6,400, like 3% or 3%, okay, fall, okay, is fairly possible. Okay, not a big deal. Now let's analyze the technical indicators. On the weekly chart, technicals are now not good. Okay, moving averages are, so S&P 500 is neutral to the moving averages on the weekly chart, but is bullish through the Bollinger Bands and through the Ichimoku cloud on the weekly chart. Furthermore, the S&P 500 is bearish through the MACD on the weekly chart, and is also bearish through the stochastic RSI on the weekly chart. This was the last thing. Okay, this was something that we were waiting for last 6 months. Okay, this has happened after early May, after first week of May. Means after 6 months this has happened. This means that the market is now correcting itself. Okay, so no saturation, no divergence, and nothing. Okay, so in this manner the S&P 500 will be seen or considered as, okay, 70% bearish. 70% bearish on the weekly chart. Dow Jones is exactly the same. Okay, the moving averages, okay, and same. Now in case of the Dow Jones, if you notice, the Dow Jones was trying to avoid this condition, but now again after 6 months there is a confirmed bearish crossover in the MACD. Okay, the same thing. This has happened in both of the indices. Perfect. Okay, now the market is in the bearish cycle. Any bullish retrace is an opportunity to go bearish, not bullish. Okay, and what does this okay, this means that the bullish retrace will happen. Okay, just like we have seen yesterday, a heavy bullish retrace, 2% intraday, but then eventually it came down. Before that, Nvidia released the earnings. Okay, heavy gap up open and then a heavy fall. Okay, so market is not sustaining in the bull side. Bullish movement will happen. Okay, so bullish retrace will give you an opportunity to go bearish. Okay, so in terms of the technicals, 70% bearish. S&P 500 and Dow Jones both are 70% bearish. Also, we are expecting a gap down open on Monday, or irrespective of any open and initial or intraday bearish movement on Monday. Okay, means even if there comes a gap up, then also, okay, it will come down either initially or intraday. It will come down. Secondly, through the candle and through the technicals, it is clear that because the MACD and the stochastic RSI in the S&P 500 and in the Dow Jones are bearish. Okay, now the momentum will be bearish. Okay, not bullish momentum, it will be bearish. Okay, now this does not mean that now the market is going to enter into the correction or in the recession or so. No. Okay, or if there is a bubble bust. No. Okay, bubble bust will be considered only when the S&P 500 loses more than 10% or loses the 6,000 psychological mark. Losing the 6,000 psychological mark means that it has lost. Okay, now we are expecting 20 to 25% minimum. Okay, this will be there, 20 to 25% fall. Okay, so then only we will consider that as the bubble burst. Okay, when the bubble burst happen, that 20 to 25% minimum. Okay, that, and when it strikes the recession, then around 50 to 60% fall in the S&P 500 and in the Dow Jones. Okay, 50-60% fall means in the 3,000 range. This is the recession scenario. Okay, not the usual or general scenario. No, only the recession scenario, 3,000 range. Okay, or somewhere like 3,200, 3,300. Okay, recession scenario. If the bubble bust, okay, then it will be back to the 2,000. S&P 500 will be back into the 2,000 range. Okay, For now conditions are not that bad, conditions are still good. Okay, moving averages are still good. Okay, the fan out condition, this also means that in the, see, whatever fall we are seeing, this is a bearish cycle. This is a short term bearish cycle. This is not that for the long term it is going bearish, correction, recession. No, 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 no. Okay, is the, because for that to happen, the moving averages will have to give a bearish crossover on the weekly chart. On the daily chart, it has given the bearish crossover. Perfect, fine, not a problem. It is indicating, that is an early indication of what is going to happen now. Okay, but until and unless this happens in the on the weekly chart, no. Okay, it will always, many a times we have seen, okay, that recovery after 5 to 7%, 10-11% fall or recovery, and then okay, that condition. But whenever that condition will be there, okay, I will mention that condition, right? So this means that as of now the short term fall is there, right? So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate it. Your appreciation matters a lot. And if you want to join my Patreon community in order to get the daily precise updates every day from Monday to Friday, then I have given the link in the description of the video and also in the comment section. Now let's analyze the daily chart. This is the daily chart. Daily chart means the short-term picture. Weekly chart was the long-term picture. Okay, daily chart is the short-term picture, means what is expected to happen through the technicals in the next week. Okay, daily chart means one candle represents one day, not 1 week or 1 hour. Okay, let's first analyze, or let's first discuss the candle. Well, it's a limited bullish candle. Okay, limited bullish candle indicating an initial or intraday bullish movement. Okay, but is not confirming, okay, a gap up or a gap down. Furthermore, if I consider this candle through the numbers as well as through the technicals, then it is not indicating an initial or intraday bullish movement. Rather, through all of these conditions, it is indicating an intraday or an initial or intraday bearish movement. Okay, why? Because it closed inside the Ichimoku cloud. It closed below my heavy support level, that was 661x. That is why in the final update yesterday I mentioned that if the S&P 500 closes below 661x, then it is a bearish condition. Okay, initial intraday bearish movement on Monday, but a gap down open cannot be confirmed. This condition allows the continuation of the bearish movement and the limited bullish side movement. That's it, very limited bullish side movement. Okay, secondly, yes, one more thing that I mentioned here in the final update, that because of that heavy bullish retrace or heavy bullish movement yesterday on Friday, it has opened the bearish side further to the 6,400 range and the 6,300 range. This means that now the technicals will not saturate, okay, even if there comes fall back to back for 3 days or so. Okay, this is very, very important, and that I will show you through the stochastic RSI and the divergence indicators. Okay, so candle is clear. Now the last daily candle of the Dow Jones, well, the same condition. Okay, so it is also but the only the good thing is that it managed to close above the Ichimoku cloud, so it is indicating an initial or intraday bullish movement. No gap up, no gap down. Okay, initial or intraday bullish movement. Okay, this means that we are expecting a dull opening on Monday. Okay, like 0.1%, 0.2 or 0.3. Okay, not much. Okay, in either side, either in the bull side or in the bearish side. If it opens in the bull side, then it will remain in a condition to come down no matter what, just like yesterday. Okay, see, yesterday I mentioned to my Patreon community members that yes, after open, if it moves up and comes into the open equal to low condition, okay, immediately after open, if it comes into this condition, then for sure, okay, it will move up a little, max to 658x, and then it will come down. It will come down 1% because it will have to erase all of the gains that will be, okay, that would have been there. Now yes, so in terms of the technicals, S&P 500 is bearish through the moving averages on the daily chart. It is bearish through the Bollinger Bands on the daily chart. It is neutral through the Ichimoku cloud on the daily chart. It is bearish through the MACD on the daily chart, bearish through the stochastic RSI on the daily chart, neither saturated, okay, nor oversold, okay, no heavy divergence. So S&P 500 in this manner is 80% bearish. through the technicals, S&P 500 is 80% bearish, right? Dow Jones is also it is also the same, okay. But the good thing is that Ichimoku cloud is supporting the Dow Jones. So Dow Jones, okay, bearish through the moving averages on the daily chart, and is bearish through the Ichimoku cloud on the daily chart, but is bullish through the Ichimoku cloud. Okay, it is bearish through the Bollinger Bands, but is bullish through the Ichimoku cloud on the daily chart. It is bearish through the MACD and is bearish through the stochastic RSI. Okay, no oversold, no that divergence also. So Dow Jones is 70% bearish, a little less bearish as compared to the S&P 500. And if you notice on Thursday, S&P 500 from peak to the low, S&P 500 lost almost 3.5% within one day from top to bottom, intraday fall 3.5%, whereas Dow Jones lost 2.5%. Okay, Nasdaq was the biggest loser. Nasdaq lost more than 5% or 5.1% intraday. And all of that fall was triggered because there was very heavy resistance zone at 676x/7x, okay, on that day. So this was the best case scenario. S&P 500 would have moved, okay, and then eventually there will be then two choices. Either it will hold, okay, a little below this, the 676x/7x zone, or will give up, but there will not be any bullish movement. Okay, first hour it tried to sustain, and then we have seen very heavy fall. That fall was accelerated further because it then lost the 672x, which was very heavy support. Okay, losing 672x means the 664x/6x will have to come into the picture no matter what. Okay, losing 672x. Okay, we have seen that intraday it came down, and losing 664x/6x will bring what? It will bring the 6550.78. What is 6550.78? That was the low of the candle formed on 10th of October when there was this the heavy fall. Okay, so it was clear that any fall after the 664x/6x, okay, will be to the low of this candle, right? Now, yes, one thing, if you notice that intraday S&P 500 lost on that day, it lost 3.2%, okay, whereas intraday S&P 500 lost here 3.5%. This fall is more than what was seen here, okay, because when this fall was seen, okay, that time the market was in the bullish trend. There was 100% bullishness through the weekly chart, okay, but when this came into the picture, then the market was only 70% bullish. Furthermore, here in this case, the MACD was trading bullish. The stochastic RSI was also trading bullish. So it sustained. In this case, MACD is trading bearish. The stochastic RSI is also trading bearish. So it failed to sustain. Okay. So these are the key differences why I'm saying a short-term bearish cycle here. So this 80% bearish movement in the S&P 500 and 70% bearish movement in the Dow Jones indicates that the market is in the short-term bearish cycle. This means that any bullish retrace is an opportunity to go bearish and not bullish. Okay, unless there comes again a bullish crossover in the moving averages and or the bullish crossover in the MACD. Any of these conditions or both of these conditions. Okay, if that happens, then it will recover. Then it will re-enter into its the bullish cycle. But now the good thing is that, okay, good thing for the bears, not the bulls, because of this green candle, now there is more than enough room in the bearish side. More room in the bearish side to what? More room in the bearish side to the 6,400 and 6,300 range, because of those two heavy green candles. Why? Because the stochastic RSI, okay, which was earlier, the stochastic RSI was, let me show you that condition. Earlier, the S&P 500, the stochastic RSI of the S&P 500 hit the initial level of saturation. When it hit the initial level of saturation on Tuesday, then it was clear. Now the market is in a technical condition to get a bullish retrace. Okay, because of this condition. If it remains bearish, then furthermore, it will saturate, it will trigger more bullishness. If it comes into the condition wherein the K and the D channel both are absolute zero, there is absolute saturation, then we will see very heavy bullish push, 2 to 3% bullish push, bullish movement within a day. Okay, that kind of condition. However, the S&P 500 broke this condition on 19th of November by giving a bullish candle. Okay, then it was clear more fall is acceptable. Then furthermore, yesterday again it gave a green candle, more fall is acceptable. Now I will discuss more in the probable movement, how the market is going to move, or how the bullish and the bearish condition. That is the next section. Okay, but before that, guys, I have this important information to share with you, that if you want to get these daily precise updates of the S&P 500 every day from Monday through Friday, as well as the stock market opportunities, the premium in the premium stocks, ETFs, etc. Okay, 50 to 80 opportunities every month, and also the midweek update video technical analysis, which is posted every Wednesday or Thursday. Okay, all of that, the movement for the rest of the week is discussed in detail with the precise levels and everything. So in order to get all of these, you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And when you visit that link, then you will see that this is my Patreon page and this is my Patreon profile. And here you will see the button or the tab which says membership options. And when you click on this button which says membership options, then you will see there are these three levels or three tiers. This level 1 is daily S&P 500 updates. So you will get daily updates Monday through Friday every day. Level 2 is S&P 500 updates as well as premium opportunities. Level 3 is the daily S&P 500 updates. Okay, hacks with high accuracy, options trading, and much more. Through this the Zoom video meeting, I will cover all of these, the strategies, hacks, everything. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates every day from Monday through Friday, as well as the opportunities in the premium stocks, ETF 50 to 80, 50 to 80, and also the midweek this the update, the video technical analysis. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community. Now guys, I am going to discuss the second part of the agenda, and here I will give you the probable movement. Probable movement means what is expected to happen in the market. Okay, bullish, bearish conditions, okay, levels, etc. So the only thing that is okay, that will be more important to the market on in the next week is on Tuesday, because on Tuesday the PPI data and the retail sales data will be released. Okay, now the inflation data will not be released, okay, before the next FOMC, which is scheduled for 10th of December. Okay, but this is the PPI data. PPI is the producer price index, will give some idea it will give some idea about the inflation. Okay, the PPI data. The retail sales data, okay, it will be the most important data, because the retail sales data will tell us whether the consumers are still spending or not. Okay, so this will further give us an idea, okay, what is happening in the economy. So based on these two data, okay, on Tuesday the market will behave and the market will react, right? But now it's clear that in the short term, okay, market is going bearish, right? Now how it is going bearish? So for that, okay, we must understand that until and unless there comes two consecutive closings below the Ichimoku cloud, okay, market is not going bearish. Okay, the same case here in the Dow Jones, the same case will be applicable to the Nasdaq also. But Nasdaq gives an early indication of what is expected to happen, because on Thursday, when there was very heavy fall in the entire market, then Nasdaq closed below its Ichimoku cloud, and because of that closing, it was clear that now the market is really losing, okay, its pace, okay, momentum is now in the bearish side. So Nasdaq just, okay, it is an early indicator. This means that there will not be any fall, there will not be any bearish movement. The S&P 500 will not enter into the 6,400, okay, until and unless it gives closing, okay, not one but two. Okay, now these two closings, okay, if Nasdaq gives these two closings below the Ichimoku cloud, Okay, at the same time, there comes only one closing below the Ichimoku cloud in the Dow Jones and one closing below the Ichimoku cloud in the S&P 500. Then also that will be applicable. That will further trigger the fall. Okay. Now, to make the matter worse, okay, the moving averages are further going to create a pattern. This was the bullish pattern. Okay. Now, similarly, we will see a bearish pattern. Okay. Now, so what does this mean? What does all of this, the technicals, this bullish bearish movement means? This means that the bullish retrace, as of now, bullish retrace is allowed. It is allowed. Okay. But to what level? Bullish retrace is allowed to the cluster of the moving averages. To the cluster of the moving averages. Okay. In terms of the S&P 500, the maximum it can go for is the 6,700. In the 6,700, there is 672x. Okay, 672x. Because 672x, now the movement, even if it sustains above. First of all, we have 664x, 6x. It will have to recover the 664x. Yesterday, you have seen that. Yesterday, the S&P 500 moved up and the high was 6,660. Okay, it failed within this zone because it was clear that no matter what, even the best case scenario, this will be the maximum. A movement above 658x is not sustainable. That is why we have seen 2 or 3 times it came down. Okay, in the last hour also, okay, reaching to this and then eventually, okay, it came down, it gave up. Okay, like almost 1% it gave up. And this clearly indicates the bearish pressure. So as of now, the bullish movement is allowed. Okay, maximum to the 672x. Okay, this will be the maximum in the bull side. But for this to happen, first S&P 500 will have to recover the 664x, 6x. There must come the daily closing. The daily closings above the 664x, 6x range. Okay, this is the zone. When that happens, then only it will be able to move up. Okay. Now, there may come a condition through some comments or news or the comments. Okay, comments maybe from the Fed chairman, from the president, or from someone comments. Okay. If there comes a breach of 672x, then what will happen? Okay, then also it will remain bearish. It will not turn bullish. It will remain bearish because as of now, it's clear that for the bullish movement to happen, for the bullishness to happen, okay, for the condition wherein we can expect the bullish recovery, okay, the S&P 500 will have to break its high. Okay, the high of this candle. The high of this candle was 6770.35. 6770.35. Okay, this was the number, the high of this candle. Okay, so as of now, technically my level, okay, it is very strong, 672x. Okay, but if there comes comment or something, some non-technical thing, technically it is not allowed to move up that much. Technically maximum it can try for is 672x. Okay, for that the condition is that back to back 4x, 6x closings must be above this zone, then only it can try. Otherwise there is no point of discussion, okay, for the 6,700 range. Okay, any bullish movement will be limited to this or around this. That's it. Okay, the bullish retrace will be limited to this in the long term. Okay, now it may happen okay, shortly, okay, in the condition, or after 2 months, 3 months, 4 months, okay, whenever such candles will be seen. This heavy candle, okay, we have seen now. Similarly, in the bearish cycle, okay, we will see these candles. The high of these candles, okay, only when the high is broken and there comes a closing, then only we will expect the bullishness. In this case, because the S&P 500 has not given a closing below the low of this candle. Low of the candle was 6534. 6534.05. Okay, it was not broken on the closing basis. It has breached. Okay, breaching indicates bearish pressure and that it will trade bearish. It will come down. But the fall will not happen until and unless there comes a closing below the low of this candle. Okay. Similarly, the bullish movement cannot happen until and unless there comes a closing above the high of this candle. Okay, this candle. Now, this candle will clear. Let me show you, okay, a similar scenario. Okay, if you have subscribed to my YouTube channel for last many weeks or months, this scenario was here. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you want to join my Patreon community in order to get these daily precise updates, then I have given the link in the description of the video and also in the comment section. Now, the scenario I was discussing, the scenario is this: the candle formed on Friday 10th of October. Okay, you can see the high of this candle. Okay, you can see the low of this candle. Okay, now in the weekly technical analysis, okay, and then in my subsequent daily updates, repeatedly I mentioned S&P 500 will trade in between these two. Okay, the high and the low of this candle. Okay, until and unless there comes a breakout condition either in the bull side or in the bearish side. Okay, if there comes a breakout condition in this, the bull side, then it will move up. Move up means that it will be able to gain a minimum of 2 to 3% movement, okay, in the bull side. If the fall happens, then that will be heavy. Okay, that will be like 4 to 5% fall in the bearish side. Then we have seen many days up, down, okay, or so. Then in the next week, okay, the condition was building in favor of the bulls. So then I have divided this into two parts. Here I mentioned that, okay, it will depend on the same 664x/6x, that as long as the S&P 500 is holding and sustaining and closing above the 664x/6x, it will remain in this, the bull part. This is the bull part. Okay, this is the bullish zone. Okay, if it closes below, then this is the bearish zone. Okay, so we have seen that it was then sustaining, it was holding, sustaining, okay, giving closings back to back, and then there came the news and it moved up. Okay, so in this manner, now the same thing will be applicable here, but now the only change is that the last time we have seen the condition was favorable to the bulls. This time the condition is favorable to the bears. Okay, this is the only change. Okay, so this means that again we will draw this. Okay, this is the scenario: the high of okay, this candle and the low of this candle. But now here comes the Ichimoku cloud, so low may not matter much. Okay, high and the low of this candle, right? Again comes the 664x/6x. Okay, the zone. This is the bull side, this is the bear side. Okay, if the S&P 500 now currently it is trading in the bearish zone, this is the bearish zone, this is the bullish zone. Okay, from the high and the low of this candle. Now, as long as it is trading in the bearish zone, highly susceptible for a fall and to breach. So on Monday, the Ichimoku cloud is almost the low of this candle. Then the Tuesday onwards, the Ichimoku cloud is, I think it is 6,555. Okay, then further of Friday, yes, up to next Friday, yes, 6,555. So as long as it is trading below the tiebreaker, this is the tiebreaker. Okay, as long as it is trading below the tiebreaker, it will remain in a condition to lose. Okay, now the same breakout condition, the bullish breakout, the bearish breakout. Okay, for now the conditions are more favorable to the bears because the technicals are indicating this the fall. This means that whenever it try for 664x/6x zone, okay, it try for, then it will struggle, but this does not mean that it cannot breach. It can breach. Why it can breach? Because the moving averages are still in the okay, above the 6,600. Okay, this is the range. Okay, that is why it can breach. Question is that whether it will be able to sustain and whether it will be able to close above or not. Okay, last time when it was struggling, then we have seen that after a week it started to sustain and close above in the bull side, in the bullish zone. Okay, now in this case what will happen? It will start to sustain either in this week, okay, or in the coming week. It will start to sustain below, okay, in the bearish zone. Then there will be the bearish breakout, not the bullish breakout, bearish breakout. Bullish breakout means 2 to 3% bullish movement. Bearish breakout means 4 to 5% bearish movement, means the 4 to 5% fall. Okay, so Well, this condition will be quite clear by, I think, Tuesday. Okay, why Tuesday? So for that, because Tuesday the economic data will be released. Okay, now if the S&P 500 fails to clear and to close above this zone, okay, by Tuesday, then there will not be good chances that it will be able to, you know, further close above this. Though it can give, you know, limited bullish candles, but a closing above the zone is not possible. Inside the zone is possible, okay, below the zone is definitely possible, but above the zone is not possible after Tuesday. Okay, so we will have to see if it is closing inside the zone or not, because if it closes inside the zone, okay, then, and at the same time if it closes above any of the moving average, then that will create a condition. So that I will mention in the final update on Tuesday, okay, or in the pre-market analysis on Wednesday, if that is the condition. Because if that condition happen, then the bullish side will be triggered. Okay, no, not permanently, no, okay, only for some time. So in this case, let me clear again that as of now the pressure is there on the market. Even if it sustains above the tiebreaker, okay, remains bullish, this will not indicate that market is going bullish. No, either it will fail at the moving averages or the key levels, or my key levels. Okay, maximum I have mentioned that as of now maximum is 672x. Okay, for some comment, okay, for some news, if it breaches, then the maximum comes the candle of the high of this candle. Okay, we need a closing either above the high of this candle or the closing either below the low of this candle. Then only there will be the confirmation of the bullish or the bearish breakout, otherwise not. Last time there was a gap up open. This open was above the high of this candle and it came into the into the bullish breakout condition. Okay, but this time this is not there. So this means that as long as it is trading, it is trying to trade up, it is trying to trade in the bull direction, it struggles, it will give you an opportunity to go bearish at the tiebreaker. If it breaches the tiebreaker, moves above, then what will happen? Okay, then we will have to look carefully into the levels and the numbers of the moving averages. Okay, then you can go bearish from those levels. But there will be a condition when we should be very careful, very much careful, because generally what we have seen is that generally during these times, okay, the market manipulators, they come into the picture. So what they do, for example, they gave a heavy bullish push on Thursday, heavy gap up open, 1.4%, the gap up open 1.5%, but again it failed. Okay, they sold heavily because initially they have created a condition that, okay, that people should buy. Okay, the buy and buy, but then they dumped it all. Then yesterday also it was struggling, then they again pushed the market up, creating a kind of like FOMO to buy. When the people started to buy, it failed. That is why we always look into the technicals and my levels and numbers. So yesterday it was very much clear. Okay, initially it will come down, initially it gave up 1%. Now bullish condition is a little different, sorry, little difficult. Okay, bearish condition is there. For the bearish condition, we need a closing. Now, not even if there comes a let's say the closing is not seen below the low of this candle, but the closing is seen below 6,555, which is almost the approx. Okay, this is the Ichimoku cloud. Then also this condition will be fulfilled, because if there comes two consecutive closings below this mark, okay, if the Nasdaq gives two closings below its Ichimoku cloud, okay, even before the S&P 500 could have give, two closings, then also a bearish breakout condition. Okay, the same will be seen in the Dow Jones. Yes, Dow Jones is the only index, the Dow Jones is the only condition that can help the S&P 500 and the Nasdaq and the entire market to sustain, because as long as the Dow Jones is holding, sustaining and trading above the Ichimoku cloud, okay, it will help the market to sustain bullish. Okay, if not bullish, but that it will not let the market to give up, because if the Dow Jones is trading above the cluster of the moving averages and above the heavy support level, okay, then it will not allow the market to give up. There will be pressure, but the market will not give up, rather entire market will sustain. Okay, condition in the Dow Jones is same. Okay, any bullish retrace is an opportunity to go bearish. But closing above the Ichimoku cloud keeps the entire market sustainable. Though the market will not be able to go bullish, but it will at least it will sustain, and this is what matters. So bullish side, bearish side is clear, but the bearish side is heavy. Bearish side is really, it will remain heavy, and the condition that you have seen here, this the heavy bearish candle. Okay, you can see it again you can see the same candle, because a lot of hundreds of billions of dollars are still okay. So profit booking will still happen. Okay, so when there comes two consecutive closings below the Ichimoku cloud, or there comes two consecutive closings below the Ichimoku cloud of the Nasdaq, and one closing below the Ichimoku cloud of the S&P 500. Okay, then this time it will come down. This time it will breach the 651x and 6500. Once there comes a breach of 6500, okay, it enters into the 6400, and also it gives the closings, back-to-back hourly closings or the daily closings below the 6500. Then it will trade in the 6400. And if this happens by Tuesday, okay, then we have Wednesday, Thursday and Friday, though because of the Thanksgiving, okay, a short week, but still, okay, we will see that it will trade in the 6400. It may not enter into the 6300, but it may come into a condition wherein it can come near to the 6400 psychological mark. So that will be the big thing, a big thing. By Tuesday it will be very much clear, okay, because that economic data is there. But if it gives a closing below the Ichimoku cloud on Monday, then perfect. In that case, economic data, okay, it won't be able to help much. Whatever bullishness will be there, it will be limited, okay, and then eventually it will have to come down. And in that case, what will happen? In that case, there will be the zone, okay, there will be the zone. Okay, similarly, this zone was there in the 6700, right? Now there will be the zone in the 6500 range. Okay, S&P 500 will try to move to this the zone. The 6500 will fail and will come down, okay, heavily towards the 6400. So guys, I hope this the bullish and bearish conditions clear. Okay, tiebreaker is clear. So guys, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. Okay, and if you want to get the daily precise updates, then you can join my Patreon community. And guys, if you have any questions that you want to ask, then please feel free to ask your question through the comment section.